Hey, my name's James Wilkinson and welcome to my YouTube channel. In this video, I want to talk about a house price is going to crash in 2024. We're nearly in March. So much has happened. We've had interest rates dropping, as in mortgage rates, the rate that you get. We've had them going back up. We've had a record start to the year with more inquiries, more buyers into the market. There's so much going on. We're in a recession. Technical recession now. There's a lot that we need to discuss in this video. So let's have a look if house prices, in our opinion, my opinion, your opinion is going to be voiced in the comments below. Let me know what you think. Are house prices going to drop in 2024? Now, just to be clear, a house price crash is 10% or more in a calendar year. That's important to understand. And this year already, we're marginally up, like 0.25% up or something like that. Not much at all. So we would have to go down 10.25% or more in order for it to be a crash. So think about that before you comment below. Now, before we jump into this, as always, do subscribe to the channel and hit the bell notification. We're one of the most active property channels, one of the busiest property channels now. We've got 20,000 subscribers, millions of viewers every single year, which is crazy. So do subscribe while you're here and do smash the like button or tickle the like button. Do something to the like button because that really helps us with the YouTube algorithm. So what is going on? Well, I can't wrap my head around how house prices didn't crash in the pandemic. That made so much sense to me that would happen. We were locked in our houses. Businesses couldn't trade for months. It was a very, very weird time. But whether you think the government's good or bad, one thing that they did quite well is the furlough scheme kept people employed and the bounce back loans funded businesses. So that helped, right? That got people, kept people employed, which was a good thing. Then what happened was people didn't have stuff to spend money on. They weren't going to the pub. They weren't going on holiday. They weren't able to get deliveries. I remember, I don't know if you can remember when you went to the supermarket, which was like a fun day out at one stage, for me at least. You couldn't even buy toys. It was all like boarded off and you weren't able to get deliveries of that stuff. So our disposable income went on less stuff. We saved more money. Some people had bounce back loans, which meant that we were richer than ever. And a lot of people invested in property. It was at that time that I thought, you know what? Business is tough. And so I should look to make sure that my girls, I've got two daughters, Georgia, who's 23, Emily, who's 3. I need to make sure that they have something to fall back on. So I have a property portfolio for myself, but I've started to build one for them, which is why we launched this channel. And it just happened to be at the time where prices were just going absolutely crazy. We started looking at auctions. Georgia and I were looking at auctions, and they were just going for more money than they would have gone with an estate agent. Now things are slightly different. We've got really high inflation that's stuck around. We've got high interest rates now, and affordability is lower on properties. So what is going on? Well, things we've got to consider here that will lead into a crash or not. First off is interest rates. So last year, interest rates were really high. Like if you wanted to get a mortgage rate, the mortgage rate that you could get would have been 6.5%, 7% a year ago when Liz Truss, remember that little period of time, 44 days? Well, when Liz Truss was in charge, there was so much uncertainty, interest rates, mortgage rates, borrowing rates went through the roof. And so that was a very, very difficult time for a lot of people. And when that happened, then it made sense then house prices should have crashed. But they didn't still. What happened was people just left the market. They stopped buying, they stopped selling, and transactions were down 20% last year. Now, interest rates is going to be a big determination on house prices going forward because it really hits affordability. So when rates were at 1%, you could buy quite a big property on a fairly good salary. Now you'll be able to afford significantly less. What's happened December and January, the lot just gone, is mortgage rates have dropped really quickly. And so we went from 6.5 to some lenders. I got a rate with the mortgage works at 3.99%, which was pretty good. Now, we need that to continue. Right now in February, we've had a bit of a blip because what happened is there was an influx of buyers in January. Loads of people came back into the market after waiting out of the market a year. There was pent up demand and interest rates, mortgage rates had dropped from what you could borrow at. Now they're starting to go back up. I don't think they're going to massively go back up. My prediction is that the Bank of England base rate will be around 4% maybe by the end of this year. And banks, if they're being competitive, will give you rates of around 3.5%. That's the best rate I think you will get is 3.5% this year. So if that happens, that could potentially slow down any property crash. One thing that's also a consideration is the election. Now, a lot of people tell me as a landlord that Labour potentially will be very bad for me as a landlord. I'm not sure either way. They have some policies that will definitely benefit me because they're talking about abolishing leaseholds. I've got a number of leasehold properties. They would go up in value. There'd be less hassle. That would potentially be good. Now, they might bring in other legislation, but that is just part of being a landlord. And so that would hit landlords potentially. Will it hit house prices? I don't know. I don't know which party, to be honest. You can have your comments and thoughts on that below. I'd like to be not really political myself on this, but I just don't know which party is better for house prices on that. But that's something that is going to happen and is going to impact us. Next is inflation, right? Inflation has been sticking around. We got it to 4%. Realistically, though, it's around 2.5% today because the government's figures have such a lag. But the government is expecting the inflation to pick up a bit and go back up near the end of this year due to energy prices again. If that happens, that is potentially bad news because what would happen in that scenario is interest rates might start going back up again. If that happens, all the confidence will come out of the property market and that will definitely push prices downward for sure. Next is the recession. So we're in a recession right now. A recession is 2 negative quarters. That's happening right now. We're in one. It's official. But they're also saying we're probably pretty much out of it already. The next data is going to be growth. So we're kind of out of the recession already very quickly. But so we didn't even realize we were in it. We're now out of it. But if that is prolonged or we go back into a recession or the data's wrong or it gets worse, that's definitely going to hit house prices because people will lose their jobs and that will mean they can't afford a property. Some of them will be forced to sell at a loss. That will make a big difference. So that is a big thing here to consider as well is jobs, right? So jobs, unemployment is relatively low at the moment. If it starts to peak, go higher, that's a problem. That will definitely hit house prices. So that's some data that we should be keeping an eye on. Next, what could keep house prices up? Well, they've said last week, we now need to build 500,000 houses per year in order to meet the demands that we've got. And that's because of people living longer, and that's because of immigration. All of this stuff is making our country, our little islands, get full up. The target was always 300,000. It's nearly doubled now. So that means that there's a supply and demand issue. And that is going to cause house prices to not necessarily plummet as much as some people might think. So that's important. The other thing, again on this side, is inflation. If inflation drops, which it is, and potentially went to deflation, that could be interesting and see what happens there. That's not ideal either. But if inflation starts dropping significantly, interest rates will come down. That could buoy the market. And one thing that is getting better that will help the market is affordability is improving. So the market didn't crash with some of the worst affordability that we've had last year for decades. Affordability is better than last year. It's better because mortgage rates have dropped. It's better because on average people have had pay rises. It's better because inflation is coming down. And it's better because house prices didn't skyrocket in 2023. It was pretty much a flat year. That leads to better affordability. That means that people are buying. We've seen this data in January. So the question is house prices going to drop? No one knows for sure. But what I would say with some certainty is they're not going to tear away and go up 20% or even 10% this year. I don't think that they're going to crash more than 10%, but I do think in likelihood they will drop this year. And I think right now, the fact that we've already got 2 months behind us and we had some fairly good data so far this year, I think you'll see house prices drop 2% this year. That's where I think it will be. Now, as an investor, that's fine. Doesn't impact me at all because I can negotiate 2% off as a discount. I can also add way more than 2% in value to a property. And so as an investor, this is a good time to buy. You're going to be able to get deals at more than 2% discount. There will also be deals that are overpriced as well. So that's where I think the market's going. Let me know your thoughts in the comments below. Do subscribe to the channel if you didn't already. Go and check out some other content on the channel right here, and I'll see you in the next video.